privilege to introduce the speaker. CA Naveen Khariwal is a practicing chartered accountant and partner at H.C. Kincha and Company and H.C. Kincha and Associates, Bangalore. Coming from a distinguished family of chartered accountants, he has been developed deep expertise in direct taxes over more than 2 decades of professional experience. He has been an active contributor to several committees and working groups of ICAI, KSCAA, Income Tax Department, and FKCCI, including participation in the review of Income Tax Bill 2025. He has also deposed before the Parliamentary Select Committee on the new Income Tax Bill. A prolific speaker and moderator, he has addressed and conducted over 50 seminars and workshops across India for various ICA branches and professional forums on topics related to income tax, tax audit, reassessment, e-assessment, and demonetization impacts. He has also delivered sessions for corporates and education institutions, including Accenture, SAP Labs, KPCL, FKCCI, and V School Bangalore, and has conducted sessions for officers of the Income Tax Department and students of SICASA. Beyond his professional commitments, he is a cricketer, having represented his college and our ICA Bangalore branch in multiple tournaments, including the national level cricket for Amity to T15 and events organized by KSCA. With this brief introduction, I hand over the floor to the speaker. Thank you.
Good afternoon to all the members present here. Post the sumptuous lunch courtesy Bangalore branch. So morning I had an afterthought. I thought let me not come in the climax. I'll, to play safe, I requested Deepak, I'll go one session before karke. So that, after the heavy lunch, I would not be disturbed there. So I played safe, and in the slog hours I have left Deepak there. He'll be alone battling there. So coming to the subject per se, return of income and assessment procedures under the new act. So to the extent possible, we'll try to cover all the sections. Should not be an issue. We'll try to cover all the sections and try to take the questions if time permits, because of the paucity of time, 1.5 hours. So straight away we'll go into the subject of return of income. So what is the return of income, sir? What are the changes now? If you see here, the return of income now is covered under 263. We have always been, under the impression that 263 is, I'll not do PAN also. Straight away, I'll go to first 263, return of income. Yeah. So 263 under the old Income Tax Act, is the revisionary proceedings of the Commissioner of Income Tax. So when you have to learn, unlearn, and relearn, 263 under the new act means 139(1) return of income. So 263 under the new act is return of income, whereas 263 under the old act is revisionary proceedings of income. Now, what is the difference between the old assessment procedures, new assessment procedures? If you see, all these sections which were scattered, they were staggered all along, they have not been put in the same basket now, basically. Everything has come under the same basket, which will make things very easier for the reader to understand and do the compliance. Now, if you see 263(1)(a), how to study the section? As you know, in the earlier Income Tax Act, my dear friends, there were 298 sections. Actually, including the provisos and explanations, there were around about 819 sections. We are under the impression that all the provisos and explanations have been deleted in the statute. It is not so, because silently they have entered as a separate section by itself. So that is why if you see, what was 298 sections were actually 819 sections, now reduced to 536 sections. All the redundant provisions have been reduced. 5,12,000 words have been reduced to 2,60,000 words. That is the beauty of the act. Now 263(1)(a) is like your 139(1). What is 263(1)(a), sir? There are 10 persons, 10 types of persons who will have to file return of income under 139(1). Earlier it was not like that. So if you see 263(1)(a), the first person is what? 263(1)(a) class 1. Sir, there is still class, there is still subsection, there is still section. Only thing is missing is provisos and your explanation, which is still there in the form of the section. So there are 10 types of persons under the new provision who have to file return of income. Number 1, 263(1)(a) class 1 is company. Number 2 is a firm. So company and firm, even in the earlier act, under 139, whether you had negative income, whether zero income, whether positive income, it was mandatory for a firm and company to file return of income. So it's so also under the new act. So 263 1A, class 1 company, class 2 firm. Now class 3, what is class 3? They are telling person other than company or firm. Okay. Person other than company or firm, when to file return? If his total income before claiming or before giving effect to which provisions? Chapter 7B, Schedule 8, table serial number 1, or deduction under section 82, 83, 84, 85, 86, 87, 88 of chapter 4E or chapter 8. Before giving effect to all these provisions, the income should be more than basic exemption limit. That means the income should have exceeded the maximum amount not chargeable to tax. Now what is chapter 7B, sir? 17B. What is schedule 8? What is deductions allowed under 82, 83, 84? We'll take that first. 82, 83 to 88 of chapter 4E. Under the old Income Tax Act, chapter 4E was capital gains. Thankfully, under the new income tax also, chapter 4 is capital gains. So 82, 83 is nothing but your uniformity 54 sections, the 54 family sections. 54, 54B, etc. All the 54, 54F, 54, all F. So before claiming exemption under 54, 54, etc., if your income is more than basic exemption limit, you have to file return of income. That is under chapter 4E. It takes care of those 6 sections. What is chapter 17B? Sir, chapter 17B, if you see, it is nothing but your registered charitable trust, what was there, has now become registered NPOs. Word charitable trust is knocked out of the statute. What comes in is only NPOs. So registered NPOs. Even in case of NPO, they are telling, even before you claim this deduction or exemption, if the income is more than basic exemption limit, please file return of income. Similarly, Schedule 8. What is Schedule 8? Nothing but your political party, income of political party. Before claiming this exemption, if it is more than basic exemption limit, please file return of income. Then last is your chapter 8. Chapter 8 is nothing but your deductions, sir. In the old regime, deductions to be made in computing total income, which was 80C to 80U, is now substituted by section 123 to 154 of the new Income Tax Act, all the deductions. So before claiming person other than company or firm, before claiming all these exemption and deductions, if your income is more than exemption limit, you got to file return of income. It is a mandate of 263 1A clause 3. Come to clause 4. What is clause 4? Specified entity also shall file return of income. If, same thing, total income without giving effect to the provisions of section 11. What is section 11, sir? In the old act, it is section 10. What is section 10 exemption has now been transferred to section 11. Then university, college or institution referred to in 45(3)(a), your 35(1)(2), 1(3), etc. University, college or institution, 263 1A 5. Business trust 6. Investment fund. Then 8. What is 263 1A 8? Person who has sustained loss in the year under the head PGBP or under the head capital gains, and this guy wants to carry forward such loss. You want to carry forward the loss, you'll have to file return of income under 263 1A clause 8. This is the 8th person. Go to the 9th person. 9th person is who? A person who is a resident but not ordinary resident. And at any time during the year, the law is telling at any time during the year, either you are the beneficial owner or you are the beneficiary. Of what? Beneficial owner or beneficiary of any asset located outside of India or signing authority in any account located outside of India. Then you will also have to file return of income. Either you are a beneficial owner or you are a beneficiary. The last one, 10. A person other than a company or firm fulfills such conditions as may be prescribed, yet to be prescribed. Person other than company or firm. For example, in the present act, you know, electricity bill, how much, sir? More than? Electricity bill, more than 1 lakh of rupees, you have to file return of income. Cash deposits in current account, how much? Around? Yeah. So cash deposits also in SB account, current account, my income is nil. But you know, there are certain conditions prescribed based upon which you'll have to necessarily file a return of income. So 263 1A, there are 10 clauses. Section mandates all of you guys shall file return of income. As we move forward, we will see the issues also. Now what is 263(1)(b)? 263(1), these guys have to file return of income. 263(1)(b) is telling those guys under 263(1)(a)(1), clause 1, clause 2, clause 5, clause 6, clause 7, and clause 9. Meaning to say a company, firm, university, college, business trust, investment fund, and that person who is a resident, other than not ordinary resident, having any asset located outside of India or signing interest, etc., these guys shall necessarily have to file the return within the due date, regardless of income or loss. These 7 types of assessees, 6 types of assessees should file the return of income within the due date, regardless of income or loss. See, there was a, in the bill, when I took for the session for KSCA, in the 263, one change is made. What was the change? There was a section in the bill which said, if you file return of income only, you are going to get the refund. That was correct. It was there in the bill, but now it's not there in the act. That they understood. Select committee, they have removed that. Earlier, 263(1), it was clear cut. They are telling if you want refund, please file the return of income within the due date. So that has been corrected. Between the bill and the act, there are more than 300 amendments, sir. They have taken all the, suggestions given by select committee, and it has become an act now. So if you have studied the bill, lot of amendments are there in the act. If you have not studied the bill, nothing to worry, because you have to learn, unlearn, and relearn again. So that section is not there now. Even though you file the return beyond the due date also, you are still eligible for refund. What about 263(1)(c)? Sir, 263(1)(c) is giving you the meaning of due date. What is due date? Due date was earlier given in the explanation. Now it has come in the section itself. Ditto of what was there in explanation, same due dates would continue to apply. Assessee including partners of the firm or spouse of such partner, if section 10 applies to such spouse. Now when that section 10(5)(a), sir, that is for all spouse in only Goa. Why? Portuguese regime was there. So 10(5)(a) applicable only to state of Goa, where the Portuguese regime was there. Husband-wife return we used to file. So here, and those who are furnishing a report under 172 means your transfer pricing report. So 92E, that is 30th of November, same due date. Company, other than above, 31st October, same thing. Person whose accounts are required to be audited under this act or under any law in force, it is same 31st October. Then partner of a firm whose accounts are required to be audited, same thing, sir, 31st of October. Any other assessee is 31st of July. Nothing to worry. 263(2)(a) is like your 139(6), prescribed particulars. They may ask you several things in filing return of income. What they may ask you? Like they may ask you all the documents, statements, receipts, certificates, audited reports, or other documents which may not be furnished along with the return in electronic form, but shall be produced before the assessing officer on demand. Then computer resource or electronic record to which the return in electronic form may be transmitted. Then 263(2)(b) is telling other particulars, like what they can ask in the return. These are all backed by section. Section says, I can ask you income exempt from tax. Give me all the details in the return. I can ask you assets of the prescribed nature and value held by assessee as a beneficial owner or otherwise in which you are beneficiary. Give me all the details. I can ask you details of bank account and credit card. Next will be coming, they'll ask you details of all your credit card. So bank account and credit card. The power is there in the section itself. Then expenditure exceeding prescribed limit incurred under prescribed heads. Such other outgoings as may be prescribed. Report of any audit referred to in section 63, that old section 44AB. Then location and style of the principal place of business or profession, all the branches. Names and address of all the partners of all your business or profession. Then names of all other members of the association of person or body of individuals and the extent of share of the assessee, shares of all such members in the profits of business or profession. When you give all these things, they are going, for example, the present 45(4) and 9B. How they are going to catch you? 45(4) and 9B presently, they are going to ask you to declare all the names of the partners, profit sharing ratio, etc. In the Form 3CD, that relevant columns are there. Wherever you have undergone reconstitution, give all the details. So that 45(4) and 9B, for example, 45(4). What is 45(4)? Inbuilt formula is there. You are not supposed to rack your brains. A is equal to B plus C minus D. What is A? Capital gain is equal to B. What is B? Cash or check plus C. What is C? Fair market value of the incoming asset minus D. What is D, sir? Capital standing to the credit of the partner as on the date of reconstitution. So all these things they are telling, there are more than 40 formulae across. Even 234B formula is there. You need not break your head. That formula, we don't know now. Present chartered account generation, we don't know why everything Winman is doing. Earlier, 15 years, 20 years back, all of you knew how to calculate B, how to round off to the nearest rupee, round off to the nearest 100, 15th March, less advance tax paid, on that for 3 months, 1.5%, etc., etc. All that calculation we used to do. Everything will come inbuilt now. So we don't know. So all these things, 45, 4, 9B, etc., I am telling you formulas are there. It starts from the return of income itself, plus in that case, that fellow has to fill up that audit report. You are going to upload the audit report. When you upload that audit report in 5C, that information is also with the CPC. So that information, the written information, then the firm when they file the return, all this will be collated. And this is fodder for the department. That is why RMS strategy, risk management strategy, and you know that, which is always the information which is being continuously mined by the board. RMS strategy formulated by board. As and go further, we'll talk about even practical aspects. Move forward, sir. 263(3), the central government may by notification exempt any class or classes of persons from the obligation to file a return of income. Now 263(4), what is 263(4)? Nothing but your belated return, sir. 139(4). What was 139(4)? Belated return. Belated return is beyond the due date. What is the time period, sir? 139(4). Before 3 months prior to the end of relevant assessment year or before the completion of assessment, whichever is earlier, gone. Now what is the due date? Within 9 months from the end of the relevant tax year or before the completion of assessment, whichever is earlier. Concept of assessment year is no more there. What is tax year? Tax year is nothing but the previous year. What was section 3 previous year has become tax year. Take a live example, tax year 26-27. What is tax year 26-27? I have to file belated return. What is the time limit? 9 months from the end of relevant tax year. 26-27. 9 months from the end of relevant tax year. Tax year ends on 31st of March 27. 9 months, 31st of December 27. That is the due date. So the section now henceforth will talk only about tax year or financial year succeeding the tax year. There is no concept of assessment year, previous year. There, what will the act will have is only tax year, financial year. So again, I repeat, sir, belated return. What was earlier 3 months prior to the end of assessment year or before the completion of assessment, whichever is earlier, is now substituted with within 9 months from the end of relevant tax year or before the completion of assessment, whichever is earlier. Otherwise, ditto provision. Similarly, 263 subsection 5. What is it, sir? It is revised return 139(5). Ditto, belated return, revised return time period was same, sir, earlier. Now also it is same. So you can, when can you file a revised return? If there is a omission or wrong statement. If you are discovering any omission or wrong statement, please do file a revised return. What is the time limit? 9 months from the end of the relevant tax year or same before the completion of assessment, whichever is earlier. What was the time limit earlier? Ditto as per belated return. At any time before 3 months prior to the end of relevant assessment year or before the completion of assessment, whichever is earlier. Then you know this 263(6)(a) is your updated return. So belated return time period is over up to December. Now next what? Updated return 139(8). How many years I can file, sir, today updated return? I can file up to 48 months from the end of relevant assessment year. 48 months continues to stay. From the end of relevant assessment year goes 25%, 50%. Then highest rate is how much, sir? 70%. Search is only 60%. Search also is 60%. Fourth year when I file beyond 36 months up to 48 months from the end of relevant assessment year, the tax rate is staggering rate of 70% it is. So now any person, if you have not furnished a return under subsection 145, regular return, belated return, revised return, for a tax year, you can furnish an updated return. Now, time limit. At any time within 48 months from the end of financial year succeeding the relevant tax year. Nothing but 48 months from the end of assessment year. But now the wordings have changed. Within 48 months from the end of financial year succeeding the relevant tax year. Take in 26-27. So 48 months from the end of financial year. That means up to March 32. So that is the concept of updated return. Earlier what was it? 48 months from the end of relevant assessment year. Now 48 months from the end of financial year succeeding the relevant tax year. Now 263(6)(b) is putting a rider. You can continue to file a your updated return. When, even though you have sustained a loss during the year, but that loss return has been furnished within the due date, and the updated return is a return of income, not return of loss. So the section is telling you guys, you have a loss, you carried forward the loss. That loss return you filed within due date, now it becomes a return of income, not return of loss. So therefore, you can file updated return of income, provided that loss return should have been filed within the due date, is what the section says. Then 263(6)(c). The provisions of clause A shall not apply for a tax year when, if the updated return is a return of loss, no doubt about it. The updated return of loss, there is no collection to the revenue. Why would on earth revenue will allow you to file return of income? Don't file. I am making you, it's a one way, you cannot enter because it's a return of loss. Number 2, if the updated return has the effect of decreasing the total tax liability, then you cannot file a updated return of income. Number 3, updated return results in refund. Updated return, otherwise it increases the refund. Then they are telling, please don't file the updated return of income. Then you cannot revise an already updated return which is filed. Updated return cannot be revised. Number 5, if any proceeding for assessment or reassessment or recomputation or revision of income is pending or has been completed, still you cannot file an updated return. Number 6, the assessing officer is in possession of information that such person for the said tax year for which you want to file updated return, there is a violation of specified laws. That specified laws also, now beautifully it's defined in the same section, 263(9)(d). What are specified, the violation of specified laws? Same things, sir. Prevention of money laundering, Benami provisions, Smugglers and Foreign Exchange Manipulators Act, Prevention of Benami Property Act 88, Prevention of Money Laundering Act 2002, or the Black Money, UFIA and Imposition Act 2015. So specified laws is also defined here. Now, move forward. Yes, update return has already been furnished. Proceeding for assessment, reassessment is pending. Assessing officer in possession of information. Then it says, and the same has been communicated to him prior to the date of furnishing of updated return. It was communicated to the assessee. Number 7, there is information for the said tax year has been received under an agreement referred to in 90 or 159. 159 is the present act, new act. 1998 is the present act. And the same has been communicated to the assessee prior to the date of furnishing updated return. Any prosecution provisions, proceedings under chapter 21, 22 have been initiated, then you cannot file updated return. Number 9, clause 9. 36 months have expired from the end of financial year succeeding the relevant tax year, and any notice to show cause under section 281, old section was 148A, has been issued in this case. You cannot file updated return. But you can file updated return if suppose you have received order passed under section 281(3). Old section is 148A(3), saying what? That your case is not a fit case to reopen. Therefore, I can, as well as come back under the provisions of updated return, I can file a updated return of income. Then number 10 is telling he is such person or belongs to such class of persons as may be notified by the board in this regard. Then 263(6)(d) also says, a person shall also not be eligible to furnish an updated return where search has been initiated under 132, or now it is 247, 132A, requisition of books 248, survey has been conducted under 133A, now it is 253, other than 133(2)A. What is that? That is other than TDS survey, which is now under subsection 4 of 253. Notice has been issued under 294 in pursuance of provisions of 295, block assessment. Tax year in which search is initiated or survey is conducted or requisition is made, you cannot file a updated return. Then 263(6) is telling if a person has furnished a return of loss under A, as a result of the loss or part carried forward under chapter 7 or unabsorbed depreciation, what was 32(2) has now become 33(3)(b, or tax credit brought forward, your 115 JAA, JAA, AMT, MAT, 206(1)(m) to P, etc., is to be reduced for any subsequent year, then you shall furnish an updated return for each of the subsequent tax year. Now, 139(9) defective return. So now what has happened? In between questions are asked, sir. Now suppose there is a refund, condonation of delay. I can't file updated return. You told if it results in a loss, can't file updated return. If there is a refund, you can't file updated return. Therefore, necessarily you will have to file a petition 119(2)A before the Principal Commissioner of Income Tax. you take an instance that the principal commissioner of income tax were to condone the delay in filing return of income. So the Honorable Principal Commissioner of Income Tax will pass an order 119(2)(b). 119(2)(b), as the case may be, for issue of refund. Under 119(2)(b), it will be enabled on the portal. You will have to upload the return. When you upload that return, there is time limit to process such return also under 119(2)(b), which is the same as per the intimation, 1 year from the end of financial year in which return is filed. For that 119(2)(b also same thing, it is 1 year. Therefore, that return would be processed, and then you are going to receive the refund. But the commissioner will necessarily ask you, in case there is condonation of for return, if you want to pay tax, he will tell nothing doing, you please go under updated return. I cannot help you here. Karke. So to that extent, his powers are curtailed. Earlier we used to go there. Now he will tell nothing doing, sir. My power is curtailed. I will tell you, just go and file updated return. That's all. 139(8)(a). But it comes with a staggering cost. We'll see 140(b) also. Now, when is a return of income defective? You have filed a return. So the return will be treated as defective when the assessing officer will consider the return as defective. He will intimate the defect. 143(1)(a) will come. 143(1)(a) will come. Gross receipts as per 26 years, gross receipts as per return not matching, or your TDS claim not matching, etc. Then what he'll tell? You please rectify the defect within 15 days. Within 15 days, you rectify the defect, then it's okay. Otherwise, the return itself will become invalid or void ab initio, or the return shall be deemed to have been not filed at all. In case there is 1 crore loss, then the return is not deemed to have been filed at all. You will forfeit. You cannot carry forward such loss for set off in the future years. You will have to be careful there. But if at all 15 days time limit is given, I am able to rectify at the 20th day. And assessing officer has kept this module open there. It's all online now. It is kept open. Not an issue. Then CPC will take cognizance of, and they will issue an intimation or an order as the case may be. So rectification is not possible. Defective return. You will have to necessarily rectify the defect. As per the CPC, there is a defect. So therefore, you rectify the defect, and then otherwise it will be deemed that return itself is invalid. Return is not filed at all. If the defect is not rectified within the period allowed, then the return shall be treated as invalid return. However, where the assessee rectifies the defect after expiry of the period allowed, then the assessing officer may condone the delay and treat the return as a valid return. The provision shall also apply to a return of income which is furnished in pursuance of an order passed under section 239(3)(b), nothing but 119(2)(b). Even a return filed in pursuance of 119(2)(b) can be treated as defective. Suppose treated as defective, you don't rectify the defect, treated as return not having been filed at all. Again problem. Then the provisions of the section shall not apply to a specified senior citizen as referred to in 402(3)(9), for which tax has been deducted at source under 393(1). Specified senior citizen, you know the meaning, 75 years of age, has only pension income. In that same bank account in which pension is being credited, in that same bank account only interest also should be credited. 75 years of age, etc., etc. You need not bother. If you give a declaration to bank, they will not deduct TDS. Earlier, senior citizen was defined at 6 places in the Act. Now it is defined in only 1 place, 2 within bracket 39. 402(3)(9). Specified senior citizen means an individual resident of India, 75 years of age, having only pension income, no other income, even the interest received in the same specified bank, etc. He has furnished a declaration to the specified bank. Earlier given at 6 different places. For example, ATD, your ATDDB, etc., etc. Move forward, sir. Now, 263(9) is giving the definition of or meaning of beneficial owner as well as beneficiary. What we saw the section there. So, beneficial owner in respect of an asset means an individual who has provided directly or indirectly consideration for the asset for the immediate or future benefit, direct or indirect, of himself or any other person. Beneficiary in respect of an asset means an individual who derives benefit from the asset during the tax year, and the consideration for such asset has been provided by the person other than such beneficiary. Again, specified entity. All specified entity also shall file return of income, meaning to say research association, association or institution, then institution, university, mutual fund, securitization trust, investor protection fund, core settlement guarantee fund, etc. Everything is given in form of a table. Lot of tables are there, sir. You have to go through the tables. Move forward. Tax return preparers, we will not do. Written by whom to be verified? 140. Ditto 140, sir. This 265 is your 140. Written by whom to be signed? In case of individual, by individual. Suppose individual is mentally incapacitated, not able to sign by his guardian or the valid power of attorney holder. In case of Hindu HUF by the Karta is not available, then by any other adult family. 25 years back, you know how many HUF we used to create? HUF smaller, HUF bigger, HUF specified, HUF unspecified, HUF with first brothers, then brothers family. First 5 brothers are there, 5 brothers, 1 HUF. Then first brother and his son. Then first brother, son, wife, everybody. So like this several, then 2 brothers, 1 HUF. Several HUF, sir. Now, as and when the government would implement uniform civil code, if at all it is going to be implemented, the capital of the HUF will be clubbed in the hands of your individual itself. All the HUF capital will be clubbed in the hands of the individual. If at all there would be uniform civil code. If the HUF as a status is abolished, then all the capital of the HUF will be clubbed in the hands of the individual. Move forward, sir. In case of a company, by the managing director. Then a company which is wound up by the liquidator. So on and so forth, ditto. Then your self-assessment tax 148. Ditto, cut, copy, paste. 148, 266, 1 it is. What is 140 now? Self-assessment tax. That is comes in self-assessment in 266. Move forward, sir. Tax on updated return. So what was 140B? No return is filed under 263(1) or 4. That means what? Your 139(1), 139(4), etc. Then how to pay the tax? Yes. Additional income tax. How to calculate? Under 263(6) shall be equal to 25% of aggregate of tax and interest payable. If such return is furnished after expiry of time available under 263(4) or 5. After expiry of time available in 263(4) or 5 and before completion of 12 months from the end of financial year succeeding the relevant tax year. Earlier it was what? Completion of period of 12 months from the end of relevant assessment year. Take tax year 26-27. Such return is furnished after expiry of time available on 263(4) or 5. So 263(4) or 5, belated return, revised return. 31st of December 28, 26-27 tax year. So therefore what to do? Before completion of 12 months from the end of financial year succeeding the tax year. So you can very well file the return. Question is asked January, February, March, can I file or not? January, February or March, easily you can file, sir. Nobody will stop you. 15 months. Outer time limit is what? 12 months from the end of financial year succeeding the relevant tax year, 25%. Similarly, 50% of aggregate of tax and interest payable. If such return is furnished after expiry of 12 months, but before the completion of 24 months, again change. From the end of financial year succeeding the relevant tax year, nothing but 24 months from the end of relevant assessment year. To that extent, the Act stands simplified. No assessment year, there is only tax year. Next, 60% of aggregate of interest and tax payable when, if the return is furnished after expiry of 24 months, but before the completion of 36 months from the end of financial year succeeding the relevant tax year. Earlier, 140B, subsection 3, clause 3, it was 36 months from the end of relevant assessment year. Now last one, 70% of aggregate of tax and interest payable, if such return is furnished after expiry of 36 months, but before the completion of 48 months from the end of financial year succeeding the relevant assessment year. Now we need to move through assessment procedures quickly. So earlier what has happened, sir? Earlier, you know, the assessment procedures, there were 33 sections reduced to 24 sections. Also the word count has dropped from 26,651 words to 13,160 words. Now, move quickly to assessment procedures. Sir, your 142(1) inquiry before assessment is now substituted by 268 subsection 1. What was 142(1) is now 268 subsection 1. So, for the purpose of making any assessment, the AO may serve on any person written who has made a return under 263 or in whose case the time allowed under 139 or now 261 has expired, notice requiring him to furnish the return of income if he has not furnished or certain other points, because the assessment procedures now starts off. Now, where such person has not made a return within the time allowed on 263(1) or before the end of financial year succeeding the relevant tax year. Before the end of financial year succeeding the relevant tax year, meaning to say before the end of that assessment year. to furnish a return of his income. Then, or to produce or cause to be produced such accounts or documents. Documents is defined in 2 within bracket 41 of the Act. 112 definitions are there. What is 2 within bracket 41 of the Act? He is telling document means an electronic record, includes an electronic record as per 2(1)(t) of the Information Technology Act 2000. Then he is telling, C is telling to furnish in writing such other information on such other points or matters, including a statement of all assets and liabilities of the SSA, whether or not included in the accounts. But this can be done only with the prior approval of the Joint Commissioner of Income Tax. Then the assessing officer shall not require the production of any accounts relating to a period more than 3 years prior to the relevant tax year. So more than 3 years he cannot ask. Then notice under subsection 1A, that is your 268(1)(a) or 142(1)(a) may also be served by the prescribed income tax authority. Then 142(2) earlier, now it is 268 subsection 4. For the purpose of obtaining full information in respect of any income or loss, the AO may make any such inquiry as he considers necessary. That takes care of 142(1) equivalent to 268 up to subsection 4. What is 268 subsection 5? Nothing but your special audit under 142(2)(a). When can he call for special audit? 142(2)(a) equivalent to 268 subsection 5. At any stage of proceedings, the assessing officer, having regard to nature and complexity of accounts, volume of the accounts, doubts about the correctness of the accounts, specialized nature of business activity, and in the interest of revenue, he is of the opinion, then after giving a reasonable opportunity, with the prior approval of the Honorable Principal Chief Commissioner or Chief Commissioner, he will direct the assessee to get the accounts audited. Audit means always by an accountant, always by chartered accountant. Inventory. What about inventory valuation? It is only by cost accountant. So inventory means only by valued by cost accountant. Obviously, they have to give a report, both of them. And inventory of this shall be done only by the cost accountant. Who shall nominate? Who appointed? You took the approval of Principal Chief Commissioner. Therefore, accountant or cost accountant also will be nominated by Principal Chief Commissioner. Who will pay the fees? Obviously, you only appointed, you only pay the fees. The Principal Chief Commissioner or the Commissioner. Then 142(2)(b), you know, irrespective whether your accounts are audited or not, if I tell you to do a special audit, again your account shall be audited. Next, then what is the time limit to give the audit? Earlier 142(2)(c), within such period as may be prescribed by the assessing officer. So after all the extension, etc., for good and sufficient reason, etc., how many years? It cannot exceed more than 6 months. The period or periods originally fixed and extended shall not in any case exceed 6 months from the end of the month in which direction to special audit is given. Next, expenses of the audit or inventory valuation, including all your incidental expenses, remuneration of the accountant, cost accountant, determined by your Principal Chief Commissioner, shall be paid by the central government. Then 142 subsection 3 equivalent to 268 subsection 12. If at all you don't cooperate at all, then your assessment will be made under ex parte. What was 144 has now become 271. 142(2)(a), no cooperation, I will pass ex parte. If I pass ex parte, earlier section 144, now 271. Obviously, you will be given an opportunity of being heard. Then material gathered on the basis of inquiry, your audit, inventory valuation, etc., proposed to be utilized for the purposes of assessment. Cost accountant, they are telling the meaning is as per the Cost and Works Accounted Act of 1959. Then 269, what is 269, sir? It is like your 142(a), estimate of value of assets by valuation officer. Estimation of value of assets by the valuation of officer. What is 142(a) has now become 269. So the assessing officer, for the purposes of assessment or reassessment, will make a reference to the VO to estimate the value, including the fair market value of asset, property, investment. And then naturally you have to submit a copy of the report. Then assessing officer may make a reference to VO whether or not is satisfied about the correctness or completeness of the accounts. Then subsection 3 is telling, which is akin to 142(a) subsection 3, for estimating the fair market value of the asset, property or investment, the VO along with 5 other officers, engineer, overseer, surveyor or assessor, 5 of them, authorized by such VO, can at such reasonable times enter. What is reasonable time? They are telling minimum 2 days time you have to give me. 2 days notice you give me before entering my property. Before you enter my land, building, etc., to inspect or to fair value the asset, property or investment, you please give me at least 2 days notice. Then the VO or the engineer, overseer, surveyor, etc., in charge of or in occupation or possession of such land, building, etc., to afford necessary facility to survey or inspect, estimate the value, inspect any books of account, document or record relevant for the evaluation of such property. Then, after providing at least 2 days notice in writing, if the person who does not afford the facility at all, no, you are not supposed to enter my premises. He does not give the facility to such VO, to such engineer, to such overseer, to such surveyor, to such assessor, or he refuses, or he does not provide such facility, then VO shall have all the powers vested in the court under the Code of Civil Procedure Act 1908, etc. Then the VO shall estimate the value of asset, etc., after taking into account all the evidence as the assessee may produce and any other evidence in his possession gathered, after giving an opportunity of being heard. As usual, if you don't cooperate, again best judgment assessment. Estimate the value of asset, property to the best of his judgment if the assessee does not cooperate or comply with the directions of the VO. Then the VO will send the report of the estimate to the assessing officer and assessee. Now 269(7) newly added. Suppose there is a mistake apparent and recorded in the valuation report, of the VO, then he is telling, okay, in 269 subsection 7 in the section itself, 142A itself, rectifying any mistake apparent on record, the VO may amend any report made by him, but as per it is 287. Then the assessing officer on receipt of report from VO, then after giving assessee reasonable opportunity of being heard, after hearing him, he will take into account such report for the purposes of conclusion of the assessment or reassessment. The valuation officer shall send the report within 6 months, time limit again for him to send the report, within 6 months from the end of the month in which reference is made. Now the central government may appoint as many valuation officers as necessary, and subject to the rules and orders of the central government regulating the conditions of service, the principal chief commissioner, etc., may appoint as many engineers, as many overseers, as many surveyors, as many assessors to assist the VO in the performance of their function. Then come to 143(1) intimation. What was intimation 143(1) is now 270. 270 subsection 1 is intimation under the old act 143(1). So return has been made under 263. 10 sections are there, 263, 1A, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, etc. Or in response to 268(1), that is in response to notice issued on 142(1), then the return will be processed. So total income or loss shall be computed after making adjustments. What are the type of adjustments? Yes, sir. There are 6 types of adjustments, not beyond that. First, arithmetical error. Okay. Next, incorrect claim, if such incorrect claim is apparent from any information in the return. Then any inconsistency in the return with respect to information in the return of any preceding year as may be prescribed. Disallowance of loss claimed in the return for which set-off of loss is claimed was furnished beyond the due date. Now that information is there with CPC. Then disallowance of expenditure or increase in income indicated in audit report but not taken into account in computing total income in the return. Last one is disallowance of deduction claimed under 144 or under any provision of chapter 8C if the return is furnished beyond the due date specified under 263(1). So what is 144? Nothing but your 10AA, sir, in the earlier regime, your units in SEZ. And what is chapter 8C? Deduction in respect of certain incomes. Now it is 138 to 152. Earlier it was 80 IA to 80 RRB. Then, if suppose there is no mistake apparent on record, acknowledgement itself will be deemed to be intimation. Then what is the time limit for passing intimation, sir? Now before that 143(1)A is there. So 143(1)A will come. If any communication is to be given for any adjustments, only in electronic mode, then when that 143(1)A comes, what is the time limit, sir? Within 30 days you have to, give your response. What is the policy number? They are asking all the details now. This is what was happening earlier. CPC came to know. 80D you are claiming, 80C 1.5 lakhs, 80D 50,000. You are running from here to there, you are claiming handicap dependent, ATU. So all the deduction you used to claim resulted in refund without any proof. Only if you are scrutinized, then only you are caught if you don't have the proof. So now they are asking the return itself, give all the details. Even interest you want to claim 3613, your house property, etc. They are asking what is the date of loan sanction, give all the details now completely. Automatically they will link it with the relevant bank or your financial institution. Acknowledgement of the return shall be deemed to be intimation where there is no sum payable by or refundable to the assessee. Next. What about 270 subsection 8? Bread and butter, sir. 143.2 scrutiny. What is 143.2 scrutiny now? What is happening now? Earlier what you used to do, now what people are doing, in future what will you do? 278, 143.2. Earlier, in the olden days, you used to tell, when did the envelope come? Show me the envelope. When did it reach the post office? What was the date there? Now, issue versus service, Supreme Court. Now, nothing doing. They are telling it is served. Moment you open the portal, it will come there. It will come on your head like this. Bang, it is already there. You cannot tell it is not issued or not served. 143.2. Time limit is anyway there. 3 months will continue. So 143.2, earlier we used to write on the envelope, oh, this is beyond that due date. Or in some cases, 143.2 itself was not issued. So you used to cite all Supreme Court judgment technically. Where a return has been furnished under 263, your 139, or in response to notice on 268.1, 142.1, the AO, if he considers it necessary or expedient to ensure that the assessee is not understated the income, computed excessive loss, underpaid tax in any manner, shall serve. The mandate is serve, not to issue. Serve on the assessee notice, either to attend the office of the assessing officer. What is the purpose, sir? No. That is only in the case of your international taxation or maybe even your search case. Otherwise, either to attend the office of the assessing officer or to produce or cause to be produced before the assessing officer any evidence on which assessee may rely in support of the return. 279 is akin to the proviso to 143.2 giving the time limit. No notice under subsection 8 shall be served on the assessee after the expiry of 3 months from the end of financial year in which return is furnished. Same to same. Now, 270 subsection 10 is your order. 143.3 order. So assessing officer will require on all specified points, take into account all relevant material, by an order in writing, make an assessment of the total income or loss and determine the sum payable by him or refund of any amount due to him on the basis of such assessment. What about if my assessment is of a charitable trust? Today it is called, what is it called, sir? NPOs, charitable trust. What about political parties? What about your hospitals, educational institution, etc.? That section continues now. They are telling who gave, either by notification their income was exempt, or they were given approval by the central government, etc. So who exempted them? Assessing officer will take up the case for scrutiny of all NGOs, etc., NPOs. Then they will tell, no, amount is not spent for the purpose or for the objectives of the trust for which it is formed. It is spent elsewhere. I am going to revoke the registration. You have no power, sir. How did he get the exemption? Who gave him? Whether by notification or whether by central government, you make a report, send it to them, send it to the central government. Central government will pass an order, yes, you revoke it. Then only 270.11 they are telling entities referred to in subsection 12. Order under subsection 10 shall no order can be made by assessing officer without giving effect to 11 unless the assessing officer has intimated the central government of the contravention of the provisions where in his view such contravention has taken place, or the approval granted to such entity has been withdrawn, or notification has been rescinded. Similarly, 270.12 for research association or institution, same thing. Then registered non-profit organization 270.13, if they have committed specified violation, is of the opinion by assessing officer, he will send a reference to the principal CIT to withdraw the approval or registration. No order can be passed. Why? It is the principal CIT who gave him approval. So therefore, unless that fellow says, okay, now you revoke it, no order making an assessment of the total income or loss of such registered non-profit organization shall be made without giving effect to order passed by your Honorable Principal Commissioner of Income Tax. Similarly, 270.14, that applies to your university, college or other institution. Same thing. Activities not carried out in accordance with objects of the trust, etc., conditions violated, You are nobody, sir, to revoke the registration. Please send a report. Give them reasonable opportunity. Then you propose a withdrawal before the central government. Then he will pass an order telling, okay, now you revoke karke. Central government may by order withdraw the approval. Then forward a copy of the order to the concerned entity and to the assessing officer. Now 270 subsection 15. As and when regular assessment is made under 271 subsection 10, then they are telling any tax or interest paid shall be deemed to have been paid towards such regular assessment. Best judgment assessment. Now when can we do best judgment assessment? You have not filed the return under 139.145 or 263.145, etc., or your update return 6, fails to comply with the terms of 142.1 or 268.1, or fails to comply with the direction under 268.5, that is 142.2a, special audit, or having made a return, fails to comply with all terms of a notice issued under 270 subsection 8, that means 143.2. Then the AO, after taking into account all relevant material which he has gathered, after giving the assessee an opportunity of being heard, make the assessment of total income or loss to the best of his judgment. Now, 271.2 is telling, before making the best judgment assessment, I will serve a notice on the assessee to show cause as to why assessment should not be completed to the best of his judgment, other than 268.1. Why 268.1? If he does not reply, I will not give opportunity. 268.1 is akin to 142.1. I gave you opportunity to file return of income, you did not file. Therefore, now I am not going to issue a show cause notice. Straight away, 142.1, I will give you opportunity. You did not file return, I will make a best judgment assessment. Move forward, sir. Powers of Joint Commissioner to issue direction in certain cases. Joint Commissioner is back in business from last year onwards because 148 approval all given to Joint Commissioner. Otherwise, was totally out of business, Joint Commissioner. Even in the faceless scheme, if you see, there are 4 units: assessment unit, verification unit, technical unit, review unit, and your Joint Commissioner, etc. Nothing, only just the 141 notice is sent from the assessment unit to take the approval of JCIT, that to all internal matters. JCIT will tell, add one more question or delete this question, that's all. Again, he will send it back. That fellow will send it to RESC or NESC, etc. They will issue the notice. Absolutely, there was no work, sir. Now they are back in business because of the approval of 148 now. Now approval, they are telling 148, go to JCIT. So power of Joint Commissioner to issue direction in certain cases is now rendered totally unworthwhile because it's not at all worthwhile in this present regime of 143.3. Move forward, sir. Faceless assessment. So the assessment, reassessment or recomputation 273.1 is akin to your 144B only. 270.10, 271, 279 shall be made in a faceless manner based on territorial area, person or class of persons, income or class of incomes, cases or class of cases as may be specified by the board. So recently, 1 month back, they called us there because, the 3 chief commissioners, they came. So 3 chief commissioners, they told that the scheme itself of the faceless assessment is in danger. It's been a failure. What suggestions you have? You please give your suggestions, karke. The faceless scheme has not been that successful at all because a lot of complaints have reached the top authority and they came to elicit our opinion. So Prashant GS gave a very beautiful suggestion. What Prashant GS told, sir, at the beginning itself, you ask them when you issue 143.2, whether they want to come under faceless or whether they want to come for manual. You give them that option. After they issue 143.2, 142.1, etc., don't give them an option. Suppose a salaried employee, small time, he will tell, I don't want, sir, I will go under faceless. Suppose businessman, I have got lot of documents to upload. It is practically very difficult for me to upload all the documents. Why don't you give me an opportunity to explain my case, karke? You record all the proceedings. I have no problem. But you give me an opportunity to be present before the assessing officer and give all the details. So that they took it. They told, okay, we will recommend that to the board based on certain parameters. For example, it's a tax audit case. You give them opportunity, make it manual. Example, certain like these cases are there. Will not allow all the cases to become, without faceless. So that is what we had discussions. Lot of examples were also circulated. Now this power comes under 144B, National Faceless Assessment Center, conduct of faceless assessment proceedings, all fine, sir. Now, assessment unit, conduct the faceless assessment. Many of the department officers, they are telling, now I made the assessment. What is the credit department is giving me? Who is selecting me? Who is telling me now my signature is not there? My name is not there. I collected so much for the department. I collected 1 crore of Who is going to give me the credit now? Earlier it was different matter. Now who is going to give me the credit? Secondly, what has happened is, all the faceless officers, you may be new or you may be 10 years experience or example 25 years experience, they are all in the same cadre now. All ITOs, all ACITs. So earlier the limit was there up to 20 lakhs, etc. Now 100 crores will be done by one assessing officer only, ITO. He is not able to understand, he is not able to grasp the facts of the case, which may be unfortunate. In any case, additions will be made. So therefore, what can he do? Either he can file a revision petition on 264, or he has to file an appeal under 246A, or he has to file a rectification application 154. Everybody will tell all these three, keep it aside. I am going to High Court. I will file a writ petition. If I file a writ petition, I will get permanent stay. I will get permanent stay. So the number of writ petitions, what has happened, they have taken care of that. They have taken note against all the faceless assessment orders, highest number of writ petitions filed since independence. Therefore, they came of the opinion. 65 years Income Tax Act now, highest number of writ petitions. Such is the stage of the orders now. Because I can't file appeal, sir. If I file appeal 246A, you are going to come down upon me and tell me pay 20%. Then I have to go with a begging bowl to the principal commissioner. Either stay the demand, give me installment, extend, etc. And 250 subsection 6A of the present act says the CIT appeals may, wherever it is possible, shall, may, wherever it is possible, take up the case for hearing and pass an order within 1 year from the end of financial year in which appeal is filed. 256A. We told before the select committee that may you make it shall. They asked us, no, what do you want, 6 months, 1 year? No, sir, that 1 year time limit is enough for us. But cases are not being taken up for hearing because the word used is may. The CIT appeals may, wherever possible, take up the case for hearing and dispose of the appeal. So therefore, if I file an appeal on 256A, it may take 5 years, 10 years, 20 years. There is nobody to question because Act is telling may, not shall. So it is pending there. So therefore, I am forced to go to writ petition. When I file a writ petition there, then now what has happened? 148A. That is why these provisions have been amended 4 times now. You see 148, last 7 years, 4 times amendment has taken place. How many writ petitions pending, sir? Now again, the FAO versus JAO. What about it, sir? Again, FAO versus JAO. Always I am going on technical grounds. How many technical grounds? 4 Supreme Court judgments have already been passed. Each one. It started after your COVID. It went there. Today I am now arguing on FAO versus JAO. So every time I have taken 4 technical stands. I do not go into the detail. 4 Supreme Court judgments, all of you. 4 technical stands. Every time bulk of writ petitions are there. Therefore they came down. They told these are all the practical problems, sir. We want to take up the issues. So therefore at the inception itself, you don't allow the officer to make mistake. You take cognizance of all my details. Please understand the details. You record the proceedings. You understand. See, every receipt is not a crash credit. Everything you are going to take, what was earlier 68, 69, A, B, C, D, is now 102, 103, 104, 105, 106. There itself, earlier it was 68, 69, A, B, C, D, read with 115 BBE. Today not so, it is 107. Then and there it is 60% rate of tax. So then and there you record the proceedings. I am explaining before the assessing officer. Is every credit in the bank account, is it a receipt or is it an income? If it's an income, you tax it. If it's a receipt, kindly do not tax. You are forgetting the difference between receipt and income. All the receipts you are taking, you are putting tax. And that too you are taxing at an astounding rate of, mind-boggling rate of 60% plus surcharge plus cess. Therefore, I am forced. So I have no other option. I will not go for appeal. I will not go for rectification. I cannot go for 264. 264 invariably if I go, if I were to win before the PCIT, no problem. If I were to lose again, I have to knock on the doors of the High Court. So again, I have to go back to High Court. So this is the thing, this we explained practically to them. They were very forthcoming. Yes, sir, this is the practical problem. This is all that's happening, and therefore, this scheme is very, very difficult to implement. Moving forward, sir. Yes. What about reference to principal commissioner or commissioner in certain cases? Now, this is going to start on GAR, General Anti-Avoidance Rule 274(1), reference to principal commissioner or commissioner in certain cases. The assessing officer will make a reference to the principal commissioner or commissioner at any stage of assessment or reassessment proceedings to declare an arrangement as an impermissible avoidance arrangement. So this is nothing but they are going to invoke GAR. As of today, the tax avoidance under GAR is 3 crores. So we will not go under GAR here. This is only the assessment procedures. So 3 crores, beyond 3 crores, now the first order, beautiful order is passed on, I will not name the company, but it is passed by officer called MS Netrapal, who is now in Delhi. Very beautiful order passed. That is on GAR. So he understood the nitty-gritties of GAR. And now he went to Delhi because his wife is there in Comptroller and Auditor General of India. She won the President's Gold Medal also there. So she is there in the CAG, and this fellow was passed the first order in GAR in Karnataka. Worth reading. Moving forward, sir. Then your reference to DRP. What is DRP? 144C subsection 15 defines who is DRP, collegium of 3 commissioners of income tax. Who is eligible assessee? This whatever 144C has now come in 275(1). If you see here, yes, the 275(16) equivalent to this 144C15. First of all, who is DRP? Means a collegium comprising of 3 principal commissioners constituted by board for what? Eligible assessee is what? Variation is proposed, arises as a consequence of order passed by the transfer pricing officer, or it is applicable to any non-resident, not being a company and foreign company. So this is DRP, that is there in reference to DRP there in 275(1) to 19. Now method of accounting, what is 145(1)? So the profits and gains of business or profession or other sources shall be computed as per either cash or mercantile system. Long back, there was the hybrid system also. If you see, that was there up to 1998, if you see. Why the government came? Earlier it was hybrid, cash, mercantile. Then pawnbrokers in 1998 report came to government. For all the expenses, they were claiming on accrual basis. For all the receipts on cash basis. Then the government told hybrid system you have to remove, either follow cash or only mercantile system regularly employed. Now 276(3) is akin to 145(3). If the assessing officer not satisfied about the correctness or complaints of books of account, method of accounting not regularly followed, or you have not followed ICDS, income not computed as per ICDS, best judgment assessment can be done. Don't think that there are only 5 circumstances under that 144. One more is there, sir, here 145(3), which is nothing but your 276(3). Make an assessment to the best judgment 271. In 271, this is not given. This is given in 145(3) or 276(3), not given in 144 or 271. What is it? You are not satisfied about the correctness or completeness of the accounts, method of accounting not regularly followed, income is not computed as per the standards notified. Now, 277(1) is like your 145 capital A, valuation of inventory, lower of actual cost or NRV as per the ICDS. Again, clause 2, valuation of purchase and sale of goods or services, valuation of inventory shall include all the tax, duty, cess, fee, etc. incurred to bring the goods or services to the place of its location, etc. Then subsection 3, subclause 3 talks about your inventory. Securities not listed on a recognized stock exchange or listed but not quoted, etc. How to value? Initial cost as per the ICDS. Then the inventory being securities other than those referred above will be lower of cost or NRV as per the ICDS. What about your inventories held by bank or schedule, your public financial institution? Again, valued as per the ICDS after taking into account the guidelines by RBI. Then 278(1) is like your 145B, interest received on any compensation or enhanced compensation will be deemed to be very simple, sir. In the year in which it is received, please pay the tax, matter ends. Interest received on any compensation or enhanced compensation deemed to be the income of the tax year now, tax year in which it is received. Move forward. Then 278(3) is like your 145B3. This is about section 249W. Will be treated as income of the tax year in which it is received, if not charged to tax in earlier year. That is your assistance in the form of subsidy or grant or cash incentive, other than that which is already taken into actual cost. Income escaping assessment. Last 10 minutes and then we'll stop. What about income escaping assessment, sir? What is 147 has now become 279. So 279 says, if in the case of an assessee, any income chargeable to tax, first sentence itself is telling income chargeable to tax, has escaped assessment, then subject to the provisions of 280 to 286, you can assess or reassess such income for the relevant tax year. What is 279.2? Same thing. For the purpose of assessment or reassessment or recomputation, the assessing officer has the power to assess such income also in respect of any issue which has escaped assessment, but which comes to his notice subsequently in the course of proceedings. So earlier you ran back, say, Bombay High Court, Jet Airways, etc. All have, grind to dust now. Then issue of notice for income has escaped assessment. 280 subsection 1 akin to 148 subsection 1. So before making assessment, reassessment or recomputation under 279, AO shall subject to the provisions of 281, will issue a notice to the assessee along with a copy of order passed under 281.3. Earlier 148AB show cause notice, 148AD order, or 148A1 or 148A3 now. So the notice required in clause A will require the assessee to furnish within such period return of income. So what is the period specified, sir, for filing return of income? 3 months. It cannot be more than 3 months from the end of the month in which notice is issued. Now, if the return of income is filed within period of 3 months from the end of the month under 148, all provisions of 263 shall apply to the extent possible. That means provisions of 139 can be applied to the extent possible. Next, 280 subsection 3. What is 280 subsection 3? It is like your proviso to 148.2. That means return of income under 148 filed after the due date. 3 months from the end of the month. I filed after 5 months. Why? Online it was allowing. So I uploaded the return. I also filed in the TAPAL. He is telling I am not going to take cognizance of that return. Whatever income you declared in the return, I will do the assessment under 144 only. I am not going to take cognizance telling that return is filed. Therefore, income declared will be nil. Although you declared 10 crores, that return of income, it got uploaded. But it is after the due date, after 3 months. No notice under this section shall be issued unless there is information with the assessing officer which suggests that income chargeable to tax has escaped assessment for the relevant tax year. Then, you shall issue the notice only with the approval of the specified authority. Now, all the information under the scheme notified under 260, directions from approving panel, and any finding or direction contained in order passed by authority tribunal, all this is added, sir. Then also you will have to take the approval. Now what do you mean by information for this section and 281? That means 148.3. Information with the assessing officer which suggests that income chargeable to tax has escaped assessment. You are thinking this is a new world. All the experienced chartered accountants here, they know in 1989 information word was already there. What was the time at that time? Then reason to believe came, etc. Information word already there in 1988, sir. 1988-89, when the uniform previous year concept came at that time. At that time, they are following, example, Diwali to Diwali, 17 months. In 1989, when you filed return of income, 17 months was the return of income which was filed. All the experiences they know, at that time, that information word was already there. So after reason to believe, now information has been brought back. So information suggesting income which has escaped assessment means what? Any information as per the RMS strategy formulated by board from time to time, any audit objection to the effect that assessment has not been made as per this act. Really, this provision has been used by the department for all the job. Audit objection that the assessment has not been made as per this act. After the faceless assessment is over, all the files should be transferred to the JAO, FAO to JAO. So at that time, what they'll do, this IAP, RAP will come. They are going to see all the orders. Audit objection that assessment has not been made as per the act. See how wide it is. 234 ABC not calculated properly. For example, is going to see, they are going to verify IAP audit, RAP, etc. 80C you have claimed, proof not there, or that 80D mediclaim you paid in cash, etc. Everything will become income escaping assessment. Excess deduction claimed, etc. Depreciation not calculated properly. So take this, make an objection, reopen the case. Obviously under the 3 years or now it is under the new act 4 years and 6 years. Under the new act. Any information received under an agreement referred to in 159 and any information available to assessing officer under the scheme notified under 260, that is your faceless assessment, 135 capital A. Any information which requires action in a consequence of order of tribunal or a court. Any information in case of an assessee emanating from survey, that also becomes your information. Under 253, other than subsection 4, that means other than TDS survey, 133 2A, 133A, 133 2A. Any direction given by approving panel, that is also information. Any finding or direction contained in an order passed by any authority, tribunal or court in any proceeding under this Act, by way of appeal, reference or revision, or by a court in any proceeding under any other law. Now this procedure before issuance of notice under 280, same thing, sir, there is no change. You are going to give, they are going to give you a show cause notice, then they are going to give you opportunity to reply. After considering reply, they will tell whether it's a fit case to issue notice under 148 or not, to reopen the case or not. Moving further, sir. Now this is the time limit under the new Act. 4 years, but not more than 6 years have elapsed from the end of assessment year, unless the income chargeable to tax which has escaped assessment, as per the information with AO, amounts to or likely to amount to 50 lakh rupees or more. Up to 4 years, beyond 4 years, up to 6 years. No notice under 280 or 281 shall be issued within 1 year from the end of any tax year. Why? Because that 1 year is for completion of regular assessment. Therefore, they are not going to reopen there. Move forward, sir. This provision still department is not using that strictly. This 150 subsection 1 is subject to restriction placed in 150 subsection 2. That means to say, irrespective of anything contained in 282, notice under 280 may be issued at any time, notwithstanding anything contained in 149. I can issue notice whenever I want, notwithstanding anything contained in 147, etc. I will issue whenever I want, not 4 years, 3 years, 5 years, etc. When? For the purpose of making an assessment or reassessment or recomputation in consequence of or to give effect to any finding or direction contained in an order passed by any authority, tribunal or court in any proceeding under this Act by way of appeal, reference or revision, or by a court in any proceeding under any other law, Customs Act. Mr. A smuggled 100 sovereigns of gold. Customs Act case continues. After 20 years, that fellow is convicted. So department will tell it is taxed under 69, unexplained investments. So therefore, the 20 years are over already. Matter sub judice in court. He can reopen. But 150 subsection 1 or 283 subsection 1 is what? Subject to restriction placed in 150 subsection 2. Any book you see, there is no example on this, except one book. That book is late Sri T.N. Manoharan's book. In that he had given a beautiful example. I do not know whether that example is still there or not. He had given a very beautiful example on 150 subsection 1, subject to restriction placed in 150 subsection 2. So this 283 subsection 1, ditto 283 subsection 2, it is, subject to the restriction placed in this. Next. This time limit for completion, sir, last 2 minutes, time limit for completion. So it is all very much same, sir, but both the sections are in the form of a table now. You see, sir, nature of proceedings or order, assessment order and 270.10 or 271. That means 143.3 or 144. How to calculate? Nature of proceedings or orders, heading, assessment order under 270.10 or 271, 143.3 or 144. How to read? Read the last column, D, then come to C. Time limit for completion, please read D, 1 year. 1 year from when? End of financial year succeeding the relevant tax year for which assessment is made. So 1 year from the end of financial year. Similarly, assessment order under section 270.10 or 271, where an updated return is furnished under 263.6. End of the financial year, you have to read 1 year from the end of financial year in which such updated return is furnished. So like this it continues. These are all, this rectification of mistake apparent on record. Same thing. 154. No amendment except as provided in 288 shall be made after 4 years from the end of financial year in which the order or intimation sought to be amended was passed. Subject to subsection 8, Income Tax Authority shall pass an order for making the amendment or refusing to allow the claim within 6 months from the end of the month in which application for amendment is received. Same time limits. Now these other amendments, even these are given in the form of a table. Last one is your notice of demand. What is that? 156 is now become 289 subsection 1. So any sum is payable, determined to be payable by assessee, that is a deductor or collector, 270 or 399, intimation under the said section shall be deemed to be notice of demand for the purposes of this section. Now, intimation of loss, 291. So the assessing officer, it is like your 157. Assessing officer shall notify to the assessee by order in writing amount of loss as computed by him for the purposes of 111(1), section 72 business loss, 112, 73 speculation loss, 113 subsection 2, 74 capital loss, 115 subsection 1, your 74A3 that loss from owning and maintenance of resources, etc. In the course of the assessment of total income or assessee, it is established loss has taken place and assessee is entitled to carry it forward and set off such loss under the provisions of the said sections. Thank you very much for us very patient.
Thank you, sir, for the wonderful session. On behalf of the Managing Committee member of Bangalore branch and member present here, I request our Chairman Manjunatha M. Hello to present a memento to the speaker. Yeah, questions.